Thank you for tuning in to another special tutorial edition of the Vulcan Report. This is dealing with the Black Ops Trading weekly pulse wave price triggers. When you have the tools in your arsenal that are necessary for victory, the most important thing you need to remember is how to use said tools in the correct situation. In our past tutorials, we introduced you to the different sections of the pulse waves and showed you what each field and column meant. And in this illustration, this is helpful tips and tricks to using the system and bending the markets to your will. So first, I think we need to go over the legend again, just as a brief rehash here. So we click the legend tab, and it breaks down to you what each alert code means. All right, so we have a 911, which is your rally alert. We have the 411, which means that the market is in an oversold situation. 311 is a swing trade with a positive swing VIX and positive momentum. A 40 is a positive swing VIX. 11 is positive momentum. 78 is a positive pulse wave. And an 88 is the Kumo cloud of death, i.e. consolidated market. When we go back and look at the in play tab, which is the tab that I primarily use, which is the securities that I focus on a day-to-day basis, and I'm constantly trading in and out of these. The primary setups that you are mainly looking for in an ideal market environment, which there is no such thing, would be, we'll use JDST as an example. Primarily what you would like to see in an uptrending market in column G is you want to see the positive 70. You want to see a 70 with a golden arrow. The golden up arrow and a 70 means that the market is in a powerful uptrend and it's locked in with momentum and everything on your side. That's the first thing you want to look for when you're looking for good buying candidates. The second thing you would like to look for, primarily under the momentum column, this is also your alert column, is a 911. A 70 with the 911 means that not only are you in a very bullish uptrend that's powerful and gaining momentum, but that the market is ready to explode even higher. Now, if you just cherry pick that only and only look for those signals, then you would not trade as often. And that's not how we do. We trade what the market gives us on any given day. We don't care about perfect setups and things of that nature, because truth being, I could take this column away, and I could take this column away, and this column away, and this column away, and only leave you with just the pulse waves entry point itself right here. That's really technically all you need. The alerts are there as a guide to give you what the technicals are in any given market at any given time. So that's what their purpose is for. It's not a guarantee that the market will perform or act as said alert. It just means that there is a strong likelihood or possibility that it is going to. Again, here's your legend, breaking down what each thing means. So basically, you could say a few things about these alerts, but really the focus should be on the pulse waves. That's really the bread and butter of the system. Everything else is just there as a guide so that all the chart work and analysis and fundamental analysis, everything that can be known and will be known is already factored into the price, hence the pulse waves. The main thing that you should be looking for really is not just, a 70 with a 911 or some positive momentum alert with your 70. That's all irrelevant, to be honest with you. The most powerful signal on this sheet is not even the 911 and 411 alerts, although those are extraordinarily powerful. The most powerful indicator on this sheet is not even an alert. It's the pulse waves themselves. If column C, which is your trend line resistance, and your pulse wave line, if those prices are the same, that means that a powerful, powerful, explosive move in that direction is likely once the price has been triggered. That is the most powerful indicator on this sheet. When these two numbers are the same, expect powerful movement in that direction if triggered. It's just that simple. That is the most powerful indicator on the sheet. I cannot stress that enough. You do not even need to look at column E or column G or H or J. All you need is column D and C. That's it. That's all you need in order to make a wise decision on what you're going to do for the day. Let's look at another example here. JDST. All right. JDST today had a pulse wave of 2378, right? 2378. Well, what did the market do today? Well, we know that JDST has rallied today almost $26, came just shy of $26. So as you can see, the possibility to make money existed, and it didn't hurt that you had a 911 right here. You had a rally alert coming into today letting you know that there was a strong likelihood of a rally in this particular stock. And what happened? The market rallied. Likewise, you had a 911 alert in dust, and it was letting you know that there is a strong likelihood of a rally in this particular stock. And so it was alerting you to that fact. Had you been paying attention, you might have been able to catch that move. What did dust do today? 35.54 is the high. Again, showing you the power of the alerts, but also showing you mainly the power of the pulse wave themselves. An alert is nothing without telling you how to enter the trade or how to manage the trade. Again, showing you the power of the pulse wave. Today, the SQQ has a 911 alert in there, letting you know that there is a strong likelihood of a breakout rally. But what did the market do today? Well, it hit $13.91.5. It did not hit the $13.92, so it kept you out of that trade. What did the market do after it hit that? Well, it pulled back. It pulled back. That's what happened. So the pulse wave, the most powerful part of the pulse wave, like I said, is the pulse wave itself, the price trigger. That's the most powerful indicator on the sheet, the price trigger itself. The alerts are fine, but this is better. That's it. That's what you need to focus on. All right, now there's been talk about what if you have a 911 here and then you got a 311 here. So in this example, we'll look at UWTI, all right, looking at the crude oil. Okay, well, let's examine that one. All right, it has a 911, right? Entry price at 25.28, right? Well, the market only hit $20.31 today, so you are not in that trade. That rally has not played out. In other words, the market, it went in the reversal. It's down a buck, okay? So the 311 negative momentum is playing out in that market for the day, okay? It gapped down and it's down a dollar. It did not trigger this pulse wave price for the day, excuse me, but nevertheless, the negative momentum part is playing out. So even though these alerts are nice and they help guide you as to what's happening in any given market, again, price pays. Price is the most important thing. Now, what do you do once you get into the trade? Obviously, you put your stop in and you manage the position that way. If you have been following in the tutorials and you've finished and completed all your tutorials, then you recall when I explained to you when and how to use a stop loss. We will not rehash that in this video because the purpose of this video is tips and tricks on how to use your price triggers to your advantage. Another thing I want to go over again is the zero reading in your uptrend and your downtrend. All that means is, obviously, if there is a zero in the uptrend column, it means the market is not trending. It's not trending. All right, it's not in an uptrend. It is not in an uptrend no matter what anyone tells you. It is not in an uptrend. In this example here, looking at the Treasury, the inverse ETF, the TMV, it's in a downtrend and it's locked in a powerful downtrend. It's not in an uptrend. Doesn't mean that it can't break out and rally once it breaks the pulse wave price trigger. It's just letting you know, as far as a trend is concerned, it is in a downtrend. So that's what you look at, okay? You keep your eyes on that. It lets you know what the trend of the market is. That's what this is there for. All right? It's letting you know that regardless of what gets triggered, the buy or the sell, it's just letting you know if you're trading in the direction of the trend or not. Obviously, if this is triggered, then you're trading in the direction of the trend. Therefore, the likelihood of a more powerful move to your favor should exist. But sometimes markets reverse on a dime. And if this was to trigger here on this pulse wave, then that's letting you know that the market was reversed on a dime and you were able to capture it. It's just that simple. The system keeps you on the right side of the market. All right, that's what it's designed to do. Okay, so in a nutshell, what am I saying? The alerts are fine, but the pulse wave is finer. Regardless of what's here, regardless of what's here, or even here, this is what you go by. This is the most powerful signal or alert on the sheet. And when these two prices are the same, if this pulse wave goes off and is triggered, you can expect a significant move in that direction. There you have it. That is the biggest top secret, above top secret, that I can give you. This is it right here. All right. I cannot stress that point to you enough. That is the most powerful thing on the sheet. So please remember that. All right. With that said, it's been a good day today, and we're not even finished the day, and already, as you can see, the pulse waves put money in your pocket if you paid attention to them and placed your tickets the way I instructed you to do them. With that said, be encouraged. See you in the trading room with a positive swing VIX and positive momentum. A 40 is a positive swing VIX. 11 is positive momentum. 78 is a positive pulse wave. And an 88 is the Kumo cloud of death, i.e. consolidated market. When we go back and look at the in play tab, which is the tab that I primarily use, which is the securities that I focus on a day-to-day basis. And I'm constantly trading in and out of these. The primary setups that you are mainly looking for in an ideal market environment, which there is no such thing, would be, we'll use JDST as an example. Primarily, in our past tutorials, we introduced you to the different sections of the pulse waves and showed you what each field and column meant. And in this illustration, this is helpful tips and tricks to using the system and bending the markets to your will. So first, I think we need to go over the legend again, just as a brief rehash here. So we click the legend tab, and it breaks down to you what each alert code means. All right, so we have a 911, which is your rally alert. We have the 411, which means that the market is in an oversold situation. 311 is a swing trade. Thank you for tuning in to another special tutorial edition of the Vulcan Report. This is dealing with the Black Ops trading weekly pulse wave price triggers. When you have the tools in your arsenal that are necessary for victory, the most important thing you need to remember is how to use said tools in the correct situation.